So it is time to prepare to finish the week very, very strong in the green. I'm going to be preparing you to trade the best setups at the best prices. In terms of the overall SPY, I'm going to be explaining to you on why the market is on track to have an overall strong bullish closing trend day and week heading into Friday. And then I'm also going to be explaining to you how we're planning to trade the SPY step by step heading into tomorrow, along with the top stocks that I'm going to be watching heading into tomorrow to be trading 0-to-8 options on. Let's get straight into how to trade the best setups at the best prices. So in terms of the overall SPY, the weekly chart pattern that has worked every single time throughout the past years, multiple years on the SPY, has repeated once again. So it's very, very clear in terms of overall direction with the pattern repeating so well that the market is on track to have an overall strong bullish trend day heading into tomorrow. As you can see in terms of the green, red, green pattern, which is, the trade idea and the game plan that we brought awareness to you in terms of Sunday, preparing you for the entire week. You can see right here, we have the green, red, green. Next week is a very strong bullish closing week. Green, red, green. Next week is a very strong bullish closing week. And if you looked at all the similarities with this pattern, in terms of the overall week, it was bottoming towards the previous week highs, right? And then here we are again in terms of the overall situation with the green, red, green. And then the next week's a very bullish overall week. Green, red, green. Next week's an overall bullish week. Green, red, green. Next week's an overall bullish week, right? So the pattern is repeating to an exact T. As you can see, the previous week's highs is clearly a floor. Market's trying to close bullish. With that being said, how do we trade this heading into tomorrow? What do you need to know, right? And make sure you stay to the end because I'm telling you, I got some stocks on my radar and these setups are expected to be phenomenal heading into tomorrow. I'm going to walk you through multiple trending stocks that I'm going to be watching. Tesla stock, Open stock, INTC, UNH. Got a couple stocks on my radar that I'm looking to trade heading into tomorrow. But in terms of the SPY, this is what you need to be aware of. Overall, it's supposed to be a strong bullish trend day. In terms of the close, it can lose a little bit of gains from the closing highs, so there could potentially be a quick scalp against the overall trend into the close on puts towards the very end. But just understand, in terms of this overall daily candle, how I envision it is that SPY is holding the vast majority of its gains. It's closing very, very strong, not necessarily to say that it's going to close directly at the highs, but in terms of what it's supposed to do with the bare minimum, it's supposed to close very, very strong in the green, close to the highs. Worst case scenario, it can potentially, have a small pullback from the highs into the very last 30 minutes into the close. So overall, it's expected to be a bullish trend day. Now, in terms of where we're at, what I'm going to do is I'm going to break down the macro. So in terms of, I already broke down the macro. That was the weekly chart pattern where we're supposed to have a strong overall bullish closing week. Now, in terms of the more micro, I'm going to keep dissecting this. So in terms of the micro, this is one pattern that I'm seeing on the daily chart. And then after this, we're going to go into the 10-day, 30-minute chart, right? So I'm dissecting it, getting very, very surgical here. So in terms of the overall SPY, these are the main patterns that I'm seeing, right? You see how the SPY has this, look at this. This is so fucking identical. Look at this pattern right here. You see how we gap down right here with this red bearish pin, and that was the exact bottom. And if you've been watching the channel, this is where I literally said you're going to want to be buying call options the next day if the market is breaking above previous day highs, because it's going to be an overall strong bullish move and look to swing trade. I literally posted my video explaining that that's exactly where the SPY would be bottoming, and the same pattern is repeating itself where SPY gap down, red bearish pin up, red bearish pin up, right? Then you have the green candle, then you have the green candle, then you have the red candle, then you have the red candle, then you have the green candle, then you have the green candle, and then you have the continued slanted uptrend, the continued slanted uptrend, right? And if you just look at this overall pattern, there is so much upside potential in terms of where exactly we are at with this overall pattern. I'm gonna show you. This is basically in terms of where we're at. We are right around here. So I'm gonna walk you through this here step by step. So right around here. You see how we have this red trend reversal pin right here, red trend reversal pin right here, and then we have a green bullish candle, then we have a green bullish candle. You see how we have a green, red, green. You see how we have a green, red, green, right? So in terms of where we're at, heading into tomorrow, we are right here. And what it's saying is the previous day highs is going to be a strong key level of interest. So basically, in terms to make it very, very simple here, it's going to be the previous closing price. And this is what I want you to be aware of. So if you look at this daily chart pattern, if it repeats in a similar cycle, in terms of the overall situation right here, so let's see, it ended up closing right here at 554.32. The next day, it ended up opening up at 547. So it ended up having a massive gap down the next day. Then it ended up exploding up, closing strong, nearly towards the high of the day. As you can see, it gave back a little bit of gains right here. But the point is, there was a drop. There was a drop. This ended up, opening up at 547, and it dropped all the way to 541. So basically, the first game plan, and as you can see right here, we're having a small gap up. Market's extremely volatile, so it's too early to say in this particular situation, along with the pattern, that we're gonna have a strong gap up. But we ended up closing at 644.95, and right now we're at 646.60. So in terms of what I want you to focus on, the main game plan for put options, there's going to be two ideas. Now, the more safe option, in my opinion, is to go with the lower level. But if we're having like a massive gap up, then in a sense, you're going to be kind of forced to look for a higher level, right? I mean, you could still consider that lower level, but if it's a very, very massive gap up, more focused on the higher level for puts, because based off this overall pattern, what it's saying that we're supposed to have a drop, and SPY's already gapping up. So, I mean, in terms of this drop, it would be very, very likely to happen early in the morning, if not towards, lunchtime, towards middle of the day. So, and then once we have that massive drop, then we're going to be going over, looking to buy calls for oversold opportunities. So, I mean, on this day, it had a massive gap down, and then when it gapped down, it had a massive fucking drop. I mean, we're talking about a close where this closed at literally 554, and the next day it opened up at 547, and then it dropped all the way to 541. Then it recovered, to a high of 556. So the point being is, man, this is very, very simple, right? In terms of this overall game plan, what you need to understand from a macro point of view within the market, we still have more upside potential for the macro in terms of this pattern repeating in a similar cycle, for the next overall month, closing into August and then middle of September, we still have more upside potential, right? And with that being said, in terms of the short term heading into tomorrow, the first game plan is puts. We're already gapping up. We're already at overbought levels. Based off that pattern, it's expected to be a strong, bullish overall closing trend day. It could get back a small amount of gains towards the highs, meaning if we're sitting towards the high of day into the last 30 minutes, it could potentially have a small pullback where it could be a crazy SPX YOLO on puts. It's a possible if we're just sitting at the high of day into the last 30 minutes. Instead of a close directly at the highs, it might have a small pullback, kind of like it did into the close today, except the massive move happened literally during after hours rather than that last 30-minute overall minutes. So keep an eye for that last minute YOLO put idea, where if you're seeing the SPY sitting at the top towards the close, right, towards the highs, and it's reacting bearish, try quick scalp on SPX puts towards the close. Now, let's discuss this idea for puts. So the first game plan is simple. If the SPY isn't having like too big of a gap up, just like a couple points, like 2, 3, 4 points, it's reacting bearish. Ideally, it's selling off, dropping in the pre-market. In terms of the idea for puts, 645. If the market goes under 645, right? So if we have a breakdown and retest at 645. So right here, 645. We have a breakdown and retest at 645 where the SPY is starting to sell off, right? We're starting to go under, starting to drop, starting to spike back up a little bit, forming lower highs or retesting out that previous 645, maintaining resistance, right? Selling off, crunching in a channel, pushing lower. You're going to want to be buying put options. If the SPY goes under 645, you see it forming lower highs, you see it struggling, you see it's forming red bearish 30-minute candlestick confirmations, you see it's maintaining below 645, right? Even if it did have that couple point gap up, you're going to want to be buying puts. So if the market is reacting bearish below 645, look to buy puts. Now, in terms of this trade idea, I would keep that focused on only the morning and the middle of the day, and mainly if the SPY is opening up flat, which would be very, very ideal. If not, then just a couple point gaps up. If the SPY is in the 650s, then we go to 645, it's going to be less ideal for puts because since it had such a big move up, it's going to be more of an oversold level rather than an overbought level. But no matter what, it is still important to understand that even if it had a big gap up, as long as the market is dropping under 645 and reacting bearish during the time periods of market open, early into the day to lunchtime, somewhat early into the day, like before, I would say like 12 p.m., right around 11:30 a.m., you're going to want to be in on puts for this first overall trade idea, right? So that's the first trade idea for puts, right? So for that to really happen, most likely we would need a smaller gap up or a flat open and then just a drop, breakdown, retest, lower highs. That's your first trade idea on puts. I also explained to you the idea on puts into the close. So into the last 30, 15, 10, 5 minutes, if we're just sitting at the high of day, literally directly at the highs, and you're seeing bearish reasons to get in, whether it's 30-minute chart pattern, that the 30-minute chart pattern is stating that we're going to have a red bearish 30-minute close, or whether it's a 1-minute or 5-minute pattern with whatever you use, you could try a quick YOLO scalp on SPX puts. That's not considered the best trade idea. It's considered more of a YOLO, so just understand that. And then in terms of the other idea for puts, it's going to be trying to capture a top at an overbought level. Now, one of the reasons why I do like this idea is in terms of, buying puts into basically thin air at a major overbought level. One of the reasons why I like this is the last time this pattern occurred, we had such a massive drop before it recovered bullish and had a strong bullish close. So, that's one of the things that I do like about it. But I will say to be extremely careful because in terms of the pattern, it's already not repeating in a similar cycle. In terms of when the pattern repeated in this cycle, it had a big gap down, then it pushed lower, then it had a strong bullish close. So in terms of this situation, since it's not having a big gap down right now, if it ends up being a big, not a small, if it ends up being a massive gap up, what could end up occurring is that it starts to bottom at 645 and has a bullish reversal. So keep that in mind. So just be a little bit careful because, since it's gapping up and not gapping down, it could potentially be a gap and go, right? Where it's going to lack those put opportunities. And you have to also be aware of key times and stuff like that because no matter what, the market is on track to close bullish heading into Friday. So basically, no matter what the fuck you do, if you just bought calls and held to the close, they should be green. Even if your trade dropped 60, 70, 80%, they should be green, with somewhat decent timing. And as long as you're not going too far out of the money, but still, out of the money, they should be green no matter fucking what. So I don't see how anyone could be fucking red tomorrow if we do close strong in the green and you just bought the fucking calls, right? So just keep that in mind in terms of position sizing and in terms of your unfair advantage and edge heading into the market tomorrow because the trend is expected for a strong bullish close. Now, in terms of this 30-minute pattern that I'm seeing and this whole idea of potentially buying puts into thin fucking air, it's just got to be a little bit careful because the pattern is already repeating in a cycle that's not similar because we're gapping up. Last time we gapped down. But with that being said, it's still due for somewhat of a pullback, and this is the pattern that I wanted to address here. So in terms of this overall pattern, as you can see, so what I'm going to do is I'm going to bring some awareness to this. This is this red 30-minute candle right here. This is this red 30-minute candle right here. Once it breaks out, has a strong breakout, then it starts to drop. Once it breaks out right here, has a strong breakout, then it starts to drop. So, with this overall pattern, we're due for a drop. And I'm going to show you on how this can play out. So heading into tomorrow, it could be something like this. And this looks very similar to me on how this moved up here. So, you see how when we have this breakout right here, so we have this break above resistance, you see how it just slants up like this, and then you see how it just slants up like this. So to me, this looks very, very similar. This all looks very, very similar. What I want you to focus on is comparing August 12th and August 13th. And in terms of the trade idea for puts heading into tomorrow, just look at how this is moving. You see how we're crunching right here. You see how we just crunched like green, double red slanted, green. And then you see how we have a green, double red slanted, green, that same pattern where I've been telling you to buy calls, along with the green, red, green. Just look at today's chart. This was so predictable with the curriculum. This was resistance right here. This was the breakout. This was the retest, previous highs of this resistance, right? Before it had this massive breakout, retest, green, red, green, buy calls, next 30 minutes is bullish. This is the previous resistance. This is the retest, the new higher support, green, double red slanted, green, buy calls again. Those two patterns on break and retest are phenomenal. All you have to do, I'm telling you, if you use this, you're going to be print money at the speed of light, man. You're going to be questioning why you never used this before or why have you never seen this before. Look at this. All you do is identify a resistance, a high on a 30-minute candle, and then if it has a massive breakout like this, once it drops back down to retest, that's going to be your new floor zone. And if you see a green, red, green at the new retest floor zone, you're going to want to buy calls once this 30-minute candlestick closes here, buy calls and open to this, sell the rip, right? And then another pattern that you can use besides the green, red, green is the green, double red, slanted green, right? So this is your new resistance level right here. This is your breakout. This is your retest, green, double red, slanted, green, buy calls here. Save that information, save that pattern. You're going to be print money at speed of light in terms of confirmations that I've seen with the 30-minute chart. I would say hands down, those are the best patterns, and they've been working on all time frames. You know, if you go back throughout the weekly chart, they've been working throughout the weekly chart on the SPY. Overall, you know, you can see right here we have resistance, green, red, green. Next week is green. This is the retest, green, double red slanted. Next week is green, and then buy calls, boom, bullish again. Now, in my experience, the green, red, green is better, but the green, double red slanted is fucking phenomenal as well. So with that being said, man, in terms of this overall pattern and trend, and make sure you save that information heading to tomorrow to be buying calls on break and retest levels at oversold levels for buying dips, taking advantage of this bullish trend day. But if you just look at this overall trend, this is what it looks like to me. It looks just like this, you know, where we had this this chop and this green, red, double slant, this green, double red slanted, green, green, double red slanted, green, some chop, some chop, some chop, starts to spike. You see that? And then in terms of where I think we're at right now with this pattern, it looks like we're literally just like this. We're starting to have this little uptrend, these flares, and then boom, it just starts to break out sideways, So the idea for puts with this pattern in terms of similarities, it genuinely looks like August 12th and August 13th, literally repeating again, where it starts to have this drop, and then later into the day, it starts to have a bullish recovery, closing close to the day's highs, right? So the main idea for puts is going to be early into the morning to at market open towards 11 to 11:30 a.m. And basically, what I would say is this would be the best confirmation, and this would be the idea. Once you see the first red bearish 30-minute candlestick confirmation, just buy puts. That will likely work. You can clip this. You can save this. This is a high conviction play. What I dislike about it is we're against the trend, but we're due for some downside potential, and we're already gapping up. So logistically here, it just makes sense to take advantage of this idea on puts. So I'm telling you, no matter at what fucking price we're at, heading into the market tomorrow, during normal trading hours, once you see the first red 30-minute candlestick close, buy puts, hold puts, set profit stops, move profit stops higher, and then sell your runners into the move, right? It's against the trend, but basically, when we got this first red 30-minute candlestick closing, even if it's a big one, the timing should be somewhat decent, and we should still have some more downside potential, right? So that's your main idea for puts in terms of where we are at in current market conditions, because if the market does open up with this massive gap up, it is likely going to drop first at that red 30-minute candle. And then that makes our other level for puts more of a level to buy if it's just sitting there at the later of the day. If the SPY is just chopping around for fucking hours towards a zone, towards a level, say we hit 640, say we hit 648 to 650. If we drop back down to fill the gap at 645 and we're just chopping around for fucking hours, basically, if you see something like this head into tomorrow, where the SPY has a big fucking drop early, towards market open, towards middle of the day, and then it's just chopping for fucking hours, buy the fucking dip. And that could be at 645. If we go to like 649 to 650, it could be 645, could be one of the levels for the buy levels, right? So that's the main idea for puts. If we open up with this big gap up, and in terms of where we're likely at, we're likely like right here. If you just look at the fucking pattern, man, like just look at this. It is identical. Just look at this. Right here is right here. And then we have this move up. Now it's having a parabolic move up, parabolic move up. When does it shatter? Big red 30-minute candle. 1 hour of fucking resistance. Green, red. You see a green, red, buy the fucking puts, right? This is key. Heading into tomorrow, look at this, man. I'm telling you, this fucking pattern. Listen, man, my intuition, alignment, everything is speaking to me right now, and I'm telling you, you guys need to use this information. Nobody is teaching you this. If you use this simple information, you're going to be pretty much at the speed of light. Look for all these patterns heading into tomorrow, man. History repeats in very similar cycles, and it tends to work best with, when you're day trading with short-term patterns, but the long-term patterns still work as well. You just got to be able to confirm them a little bit more strategically, right? But look at this. If you see a green, red, buy fucking puts, and then look, red, green, buy fucking calls. These are key trend reversal patterns in terms of where we're at. We're at major resistance. It's due for somewhat of a drop. It's going to try to fill the gap that's waiting to fill below, right? So if you see a green, red, or if you just see a red, buy fucking puts. But a green, red is a great confirmation for reversals. And then red, green for reversals, even green, red. Those two double candlestick patterns tend to work out phenomenal, man. It happens all the time. Red, green, similar reversal, bullish, right? Green, double slanted, red, green, bullish, right? Green, red, green, bullish. I'm telling you, if you just use all of those 30-minute patterns with the information that I'm providing to you, with the levels, you are going to fucking go green every single fucking day. You are going to genuinely see that losing is genuinely a personal fucking choice within this stock market if you just wait to trade the best setups of best prices, wait for the 30-minute candlesticks to close in coordination with the proper patterns. You're going to see on how well this works. Look at this same fucking pattern, the same shit I just fucking showed you happened again. It happens all the fucking time, man. Look at how many patterns are repeating itself. Red, green, facing upside, bullish, right? Red, green, facing upside, bullish, right? It just happens all the fucking time, man. So use these patterns, use those levels. Now, in terms of a good top number, man, at the morning, oh my gosh, anything above 649, but a nice keyhole round number where the market would love to drop towards this idea. Anything above like 649, but like 650, man. Anything above 650, 651, 651.70, 650, all fucking phenomenal levels for puts, man. So if you see that first red bearish 30-minute candlestick towards open, get it on the puts. If you see that trend reversal candlestick confirmation towards open, get it on the puts. Another thing to look for as well in terms of getting it on the top is look for the channels, right? So instead of just the first red bearish 30-minute candlestick, if the SPY's forming a channel where we're just sitting, sitting. If it starts to break below wherever the support forms on the channel heading into tomorrow, right? You obviously have to be able to identify that heading into the market. Just look for the bouncing channel, up, down, up, down, up, down. If it's just going straight the fuck up, then it's more of the trend reversal patterns in a red bearish 30-minute candlestick confirmation. But if we're just in a fucking channel, right, and it's not going straight up, I mean, in terms of the pattern and repeating itself, it's supposed to be more of a straight up move. But if it does end up just sitting at a fucking channel, once it starts to go below the support of the channel with a red, green, red or red bearish 30-minute, just get in on the fucking puts, man. All right? Either fucking way, it should be a very easy opportunity to trade and get it on the puts. I would say that would be our number one opportunity for early into the day. It's favoring the puts. It's not favoring the fucking calls. If anything, early into the day, calls are going to have the limited upside potential where it's going to be one of those situations where, people could potentially make some quick short-term money in and out. Like this piece of fucking shit, BLSH, where they can try to go long at fucking open. This opened up at 90 and then it spiked to 118. So if you went long at open and sold very, very quickly, yes, you would have made money. But overall, basically, SPY looks like a fucking BLSH heading into market fucking open tomorrow. So you decide what the fuck you want to do, right? I would encourage you to look for the opportunity on fucking puts. Look at this. Red, green, red, fucking sell-off, red fucking trend reversal. This was screaming fucking bearish with all the fucking red 30 minutes. This was support right here, breakdown, retest, green, red. Oh my gosh, that same pattern that I just showed you on SPY was a breakdown and retest on Bish. The fucking strategies are working on IPOs that literally just fucking came out. Look at this, man. It works fucking everywhere. You guys are absolutely fucking insane if you're not fucking using this. This is the best fucking curriculum in the market. It's so simple and it prints. All of this was support right here. Massive sell-off, retest, green, red, sells the fuck off, right? Green, red, bearish. And then what? Oh my God, it's the same fucking thing. Red, green, bullish. Wow, the same fucking pattern, man. Now this is going to try to start to spike for the short term a little bit and then retest fucking 80 and then try to drop again. Look at this. Green, red on a breakdown and retest. Green, red sells off. And then at key support, this is your breakout level, breakout and retest. Fucking red, green, bullish. The same fucking pattern I just showed you on SPY on fucking BLSH. But anyways, man, use all that information. You're going to print money at the speed of fucking light. In terms of other, patterns and similarities, like I said, just look. You can look for the crunch, or you could just look for the spike out the gate with the first red 30-minute candle, right? But basically, all these patterns are stating that we're due for that pullback early into the day. If you just compare this purple, this purple, this purple, the way you see how it grinds up right here, crunches, drops, right? Then it spikes, grinds up, crunches, drops, grinds up, crunches, drops. Basically, once we start going above this level right here, and then we start to have that massive breakout, and it hasn't had that massive drop yet, that's when it's due for its limited upside potential and a nice pullback, and then it has a bullish fucking recovery. It's been happening all the time whenever it forms that red 30-minute pattern that we used, I believe it was on Wednesday to fucking just crush it on fucking calls with that pattern that I just disclosed to you. But yeah, pay attention to that, because I'm telling you, it prints nonstop at the speed of fucking light. And I'm going to get into some more levels here shortly. Let's see. Just looking at this here real quick. So, yeah, I mean, those are the main things that I wanted to cover within the 30-minute chart. Now, let's get into the overall levels, right? So, above 649 to 650, obviously great levels for puts. Now, let's talk about calls. So, obviously, we all want to fucking buy calls because it's supposed to be a strong bullish closing trend day. Now, just in terms of how we're setting up, it's likely going to be a move where we have a nice drop and we drop first towards market open. So we do want to buy those fucking puts instead of getting trapped in calls towards the peak, right? So I gave you the idea on puts, the if we're just spiking, trend reversal 30-minute, red bearish 30-minute, just get it on the fucking puts towards open, right? Now, in terms of the calls, these are going to be the keys. So for calls, a key time is past 12 p.m. Any time past 12 p.m. is key. If the market did sell off towards open, then 12 p.m. is a key reversal time to look. Now, if the SPY does sell off, these are going to be your levels for calls. If we hit at least 649 and SPY's just sitting, 645 is one of the key levels. So if we're sitting around at 65 or slightly below it, that's going to be one of our key levels. One of our key times, if the market does drop first, is going to be 12 p.m. for calls, right? So the key time could be 12 p.m. for calls. Anything past that, key level, if we have a massive gap up, is going to be the higher one towards 645, slightly below. Now, let's look into some key levels right here. So some key fucking levels, let's see, 640, yeah, this right here, this is it. I fucking found it. It's right here. 641, 641.50, 642s. That's your strong oversold buy zone. For 645, the market would have had to dropped, and it would need to have stabilized at around, 643 mid, 644, as long as it's stabilizing slightly below or slightly around 645. Then you can consider calls at the higher level past 12 p.m. If you are considering at the higher level, use the best confirmations. Look for strong consolidation, strong chop, green, red, green, green double slanted, red, green. Look for all the bullish 30-minute candlestick confirmations, trend reversal candlestick confirmations. Understand the key times, right? So those would be your two main zones and levels for calls. Now let's just study the drops, because in terms of how we're looking out, this looks like it's going to be the most one in alignment. So, 646 all the way to 642. So about a 4-point drop from the highs. So another key level is going to be a 4-point drop from the highs. So if we quickly start to, if we have a morning spike and the SPY drops 4 points from the highs, once we drop 4 points from the highs, that's going to be the key level, right? So this is going to be key as well. I'm telling you, I want you to be laser focused on on August 12th and August 13th, because in terms of pattern recognition, this is the most identical one. Be laser focused on this, right? So basically the bottom was towards the pre-market resistance and towards the previous day highs. So the point being is, if we go to 649, plus, the potential bottom is right here. This is where our potential bottom is in our first buy zone for calls. It's literally at the gap, right at 645, mid 645, gap, close reversal, previous break and retest, right? So again, man, I'm fucking telling you, if we're opening up at 649 to 650, look for an idea on puts, and then avoid puts at 645. If we are having that big gap up, especially if we're just sitting there towards later in the day, then avoid that fucking lower idea on puts. Look, let's just put it this way, all right? If the market fucking drops, all right, this is going to be a clear way to establish that. If the market fucking drops towards open, we drop a couple points towards opening highs, right? Just don't fucking buy puts later into the day or at the fucking dips. If you missed the move because you didn't fucking listen, I told you red bearish 30-minute candlestick confirmation, you can on the spike, trend reversal 30-minute candlestick confirmation, or fucking red, green, red, or just a channel breakdown, just get in on the puts early. If you didn't buy the puts early and the market dropped 3 to 4 points, then no matter fucking what, even if we fucking go below 640 don't buy the fucking puts. So just write that fucking down. That should save you green at the speed of light heading to tomorrow, man. Look, we're all interested in buying these puts fucking early. We want that massive gap up for the puts. That's what we would prefer and want, right? It's that fucking simple. Now, if we're having this big gap up, just think a 4-point drop from the highs, right? So SPY sells off 2 to 3 points. That's where the highs can be. So now you know where the highs is after it drops 2 to 3 points. And I explained to you how to get in before it drops 2 to 3 fucking points, losing to personal fucking choice every single fucking day. So, if we're having that big gap up, look for calls at around that 645 to 644. And then the next lower level would be 641 to 642, right? Key time for calls is 12 p.m. And I believe that's going to be it. Let's see. Let's just look at this chart. Next level below that would be 636 to 635. Basically, if the market found a way to drop to 635 to 636 to 637 heading into tomorrow, I would look at it as a situation to just full fucking port calls, where you literally just put your entire fucking portfolio in fucking calls and just watch it fucking skyrocket from fucking 636 all the way to fucking 640 plus, right? So that's another oversold trade idea where I would just automatically buy calls. Auto buy call levels, oh my gosh, if we went below 637, I'd be fucking in there heavy. I'll be watching my 641. And then if the market has a big gap up and then towards middle of the day, we're sitting around 644, 645, then I'm going with the higher fucking level. And like I said, for puts, do not buy puts at 645 if the market already crashed above towards 648 to 649 plus. Do not buy the fucking puts. No matter fucking what, at 645, if the market already crashed from 649 towards the market open to middle of the fucking day. Just understand, the overall trend is considered bullish. So, the easiest fucking way to make money heading into tomorrow is to not just use my fucking game plan, but it's also to just buy calls on an oversold dip. The easiest way to make money is to buy calls on an oversold dip. Now, based off the overall game plan, puts could genuinely be one of the easiest ways as well. But the disadvantage to that trade is it's against the trend. But it does look like a very easy money-making opportunity to take those puts if the confirmation is there in the morning with what I just explained to you. Just make sure that, in terms of that situation, right? Make sure you set the profit stops. Make sure you sell into the moves. And just understand the unfair advantage with calls is it's supposed to close bullish. So if the market already dropped, let's put it this way. No matter fucking what, if the market drops 3 points from a level, that could be a level where you just buy fucking calls with a blindfold on and you should be green if you fucking hold it. If you're looking for the exact bottom, it could be towards 4 points, right? So a 3 to 4 point drop, fucking calls, man. Hit fucking calls. Hold the fucking calls, set the fucking profit stops, move the profit stops up higher. That's the game plan, man. I gave you the levels. I gave you measurements and price. I explained to you confirmations. My gosh, based off of everything I fucking said, I would say if you are fucking red, no matter what fucking happens tomorrow, with this fucking game plan, if you are fucking red, just fucking quit. Everything I said should be in full fucking alignment. I'm telling you, this is the highest confident game plan of the entire week. It's got predictability. It's got lucrative opportunities where it makes sense to do puts first for an easy money-making opportunity where you walk away green, and then if you choose to keep on trading, you make one more trade, buy calls with the key confirmations towards the key levels, towards the key time I said, hold the fucking calls, trade the overall trend, right? It looks like a no-brainer fucking opportunity setting up where we get that drop towards open after the red bearish 30-minute, nice quick trade on puts, walk away. Once we start chopping out a key level towards a key time, buy calls, hold it into the close, sell into the fucking move, trade both ways, man. This looks like easy fucking sweet money, man. Look, if you're fucking red tomorrow, just fucking quit. If you're green as fuck, join Team Roar and print with us non-fucking stop. Non-fucking stop. Unlimited fucking printing, unlimited fucking winning, non-fucking stop. You're looking at the best fucking, one of the best game plans of the entire fucking week, man. Losing is going to be a personal choice. We will finish this week very, very strong within the green. The SPY is going to be the number one setup heading into tomorrow. But I will say this idea for calls and even puts too is going to require time to hold. And the idea for calls is a bit more difficult. I would say the idea for puts is going to be a lot more smoother and easier. The idea for calls is going to be a bit more difficult, chop, burning fucking theta, trying to get a lot of people out of that before the big move. It's going to be a bit more fucking annoying to be on the calls, but the upside to that is it's the trend, and the trend is supposed to close overall bullish, right? And then you could look for that last minute YOLO. Actually, I would just avoid that overall last minute YOLO into the close. Based off of what I'm seeing, just look to potentially avoid that last minute YOLO into the close on puts. Just focus on buying and holding those calls, selling into the move towards the close, right? But in terms of easy move, the easiest play could be the puts, and then the calls is going to take some time and be a little bit more difficult in terms of holding and stuff like that. But the advantage to that is you're going with the trend of the close. Therefore, it makes sense for it to be more chop, reckless, and annoying because you're trading the overall trend. So it's like, it's fucking worth it. One of the downsides with the idea on puts is the market's supposed to close strong no matter fucking what. That's one of the fucking downside. And like I said, one of the worst things you can do with puts tomorrow, if we have a 3 to 4 point pullback and you're buying fucking puts, seek fucking help. Seek fucking help. Leave the fucking market. Just fucking quit. You're better off throwing your money away in the fucking trash. All right? Just do not get involved with the market. If you are buying fucking puts after a 4 point fucking pullback, seek fucking help. Now, if you use this fucking information, you're going to be fucking green. Okay? You're going to see it's going to be so fucking accurate. Everything's going to fucking work. We're going to print non-fucking stop. You're going to say, dude, I just ended my Friday understanding that losing's a personal choice. And then you're going to enjoy the fucking weekend and you're going to join Team Roar. That's exactly what you're going to fucking do. And you're going to join Team Roar because you're going to realize we have the best trades in the market. We're going to make you a fuck ton of money with these overall trades. Now, let's get into some of the stock plays. So, I do have more. I'm not going to be disclosing all my setups. But I'm telling you, man, I've been fucking killing it with the stock plays, man. It's just got to be weight. For those of you who know, it's a more of a rarity, maybe 1 to 2 plays a week. I'm very, very rare setups. I've been doing like 1 swing trade a week, and then I've been doing like 1 play every Friday on the 0 days for stocks, and they've all been fucking hitting. The last one was Tesla. That hit multiple times. And then the one before that was fucking Webull. Those went up 1,000%. I recently had my swing trade on fucking KSS. That worked out fucking phenomenal, man. We were swinging from the lows. This is still fucking pushing to 1450s. And my target on this was literally towards 16 plus, man. It's still fucking pumping up. So KSS is another one where I'm going to be fucking looking to trade heading to tomorrow. It's got 0 dates. It's already having a small gap up. It's on a strong bullish uptrend. And look, here we are again. Here we are again. Look at this delayed reaction. Oh my fucking gosh. I'm looking at my content right now and I'm saying like, man, the amount of fucking money this is about to make people, like I'm genuinely in shock that this is fucking free. I'm looking at these fucking setups I'm like, damn, you can actually come into the market and just fuck shit up so fucking easily and easily make fucking money if you know what the fuck you're doing. And then I'm looking at my fucking content, I'm saying, damn, this is some good fucking shit. Look at the fucking game plans, man. This is the same fucking setup on fucking SPY that I believe we used on fucking Wednesday to crush it on fucking calls. Look at this. This is that 30-minute red candle. You can use all of my fucking setups and patterns on stocks. They work like fucking crazy. So you need to pay attention to fucking calls because we have 0 dates fucking tomorrow. And all fucking calls has been doing is fucking skyrocketing this whole fucking week from 11 to fucking 1450. This is going to be a serious money-making play. So pay the fucking attention, man. Look at this. The volume is peaking out. Volume was at 10 fucking mils. Now we're at 9 fucking mils. Look at this, man. The volume before, as we were still having nice green days, gradually going up in a slower way, we were sitting at 4 million, 5 million, 4 million, 5 million, 6 million, right? We got double the volume coming in. And this is already due for a short-term target of 16 to fucking 17. I'm fucking telling you without a fucking doubt. For the short fucking term, bears are fucked. This stock is on track for 16 to 17. And if it doesn't happen earlier, then it happens later within the next 30 days to 60 days. It's gonna fucking happen where we're going to fucking 17, right? So the point is, we're breaking above major resistance at 14. Last time we fucking broke above 14, this went straight the fuck up to fucking 21. The pattern that I disclosed in my last videos that I'm not going to be fucking going over again is saying that we're going to go to 17 bare fucking minimum. And look, we have 0 dates expiring tomorrow and we have the pattern. Look at this, man. This is so much fucking money getting ready to be made. The amount of fucking money that I'm seeing to be fucking made in this trade idea, it's like fucking golden. This is worth a fuck ton, you know? And all of you watching this, you're saying, man, nobody else is talking about this. Nobody else is showing this. I'm fucking telling you, man. This is the same fucking curriculum I'm using on SPY with KSS. It works both fucking ways. Look at this. We got 0 dates on KSS heading into tomorrow. We got the 30-minute red right here at 14:30, right? This big 30-minute red candle. So think of this set up in a way as a delayed reaction of SPY, you know? SPY recently had this massive move up. Once we went above that red 30-minute, it was right here. When we went above that red 30-minute, where was it? It was right here, right? When we went above this, I told you all fuckers to buy fucking calls. And if you fucking listen, you fucking banked, right? And then we had the green, double red slanted green, the buy calls again on the break and retest. All the fucking game plans worked. But the point being is, once we went above this level, it fucking pumped and had a strong bullish closing trend day. So KSS is approaching a volume breakout, and it's approaching a level where a massive fucking squeeze is about to occur with this fucking volume. Look at this level. This is the level right here. Look at this. Bottom zone, 1380. Where's the top zone where the crazy fucking move occurs? Right here. Look at this. It's the glitch in all this glitch right here. It's giving us the glitch is right here. Look at this. This is the glitch right here. The closing price of these candles. 14 fucking 50. If you see a breakout above 14 fucking 50. Now look, I want to get a bit more surgical here with this 30-minute. What was this 30-minute? 14. Yeah. Okay, so it's 1450. High of this is 1440. We're going to go with the highs of the closing price of these glitches. So 1450, 1460. We go above 1460, buy fucking KSS. As long as we are holding above 1440, it's going to be a strong bullish closing trend day where you are going to see it is going to fucking spike. It is going to fucking rip like fucking crazy. Look at what happened right here when it started pushing above 14. It was trying to fucking pump like fucking crazy. Right here when it started pushing above, fucking 11, 12, 13, 14, massive fucking rip. I am fucking telling you, man, do not fucking miss out on this fucking play. Because without a fucking doubt, within time, we will be fucking going back to 17s, man. And we swing this fucking early on, man. I'm fucking telling you. We swing this fucker early fucking on. We had so many people in the chat make 100% on that. So like I said, I'm going to keep giving you them, but just be patient, right? So I gave you the perfect swing trade on KSS. A lot of you made 100%. Now I'm giving you a day trading opportunity on it, right? And if you're still in those swings, still leave runners. I told you to leave some runners. Still leave the runners, right? And I'll let you know when I see the next swing trade. As of now, I don't have a swing trade on my radar besides, the idea that we already have played out with the SPY calls. You could still leave runners on the SPY. For those of you who went like 3 weeks, a month plus out, that still has more upside potential, man. But I gave you the swing trade idea at the beginning of the week. I said strong bullish closing overall week. Look to buy, calls and overall bullish dips on overall oversold dips. Going to be a strong bullish closing week, right? So the last swing trades that I gave you in terms of ideas was the SPY one and the KSS one. They all printed. I'll let you know on the next one. But look, with the overall swing, you can still hold some runners, but now it's a day trade idea. Now we got this day trade idea set up. So that's the game plan for that. As long as we're above 1460, go long on 15, 0.5 out strike calls. If there is a 15.5, whatever the fuck the option chain is, look to go about a point out, a point or 50 cents out of the bare fucking minimum. Strong bullish closing trend day overall. Fucking crush it on KSS. Plus it still has swing trade upside potential. I mean, if you gave this like 60 more days, we're going to 17. If not tomorrow, we're fucking going to 17 within the next 60 fucking days. Look at this. It's the same fucking thing that's happening, man. Look at this. You have this sharp move up Oh my gosh, this is all fucking history repeating itself, man. It blows my mind that people are fucking sleeping on these opportunities, man, because when these become Friday 0 days, these rare setups with low volume, oh my gosh, when the pump fucking kicks in, they go up 1,000 fucking percent. Look at this. Even the 30-minute chart, man. Are you seeing what's fucking happening here? We're getting higher fucking support, man. Look at this. Look at the way we're moving. Look at how we're moving, man. Oh my gosh, this is a masterpiece. I'm looking at a fucking masterpiece, man. The fuck? How can you guys not all be in on this fucking KSS? I'm looking at a fucking masterpiece here, man. Everything about this is screaming, history's gonna repeat itself, man. This is just waiting to fucking blow up. Man, this fucking idea. Look at this. You see how we're just gradually, look at the way we're moving. Look at the way we're moving, right? Let me get rid of this. Let's make this fucking clear as fuck. Look at this. Look at how we're moving. You see this gradual spike. After it has that spike, what does it do? Gradual fucking downtrend. It's like, dude, look at the similarities, man. Look at this fucking chart. Gradual downtrend, fucking identical fucking flex, and then we just sit, and then what the fuck starts happening? Oh my gosh, the same fucking thing starts to uptrend. Where the fuck are we now? Oh, it looks like we're right fucking here. It looks like we're generally right fucking here. This is where we're at. You want to know where we're at? I'll fucking show you. This is where we're at. Sharp move up. So in terms of where we're at, we're either towards some chop, blow the fuck up, or just blow the fuck up. Either fucking way, it's happening, man. It's happening either fucking way. So you do what you want with that. Just understand that's where we're at. Heading into tomorrow, we're either in some fucking chop, then we blow the fuck up next fucking week or within some time, or we just blow the fuck up, right? So you can literally just buy call option. If you have no fucking look, you could try the idea on 0 dates, and you can also take a 60-day extra, something below like 60 days, and just fucking do both. If the one tomorrow hits, you'll make fucking multiple 100%. If it doesn't, the other one will hit, and you'll make it all back and more. One of them's gonna hit either way, and then if it does work tomorrow, both of them will fucking hit. So if you want to do something with calls, literally take a fucking swing trade, like fucking 30 to 60 days out. And then if you want to do the 0 day, if you want to day trade it, do that too. Do both. And then just hold them both. And if it doesn't blow the fuck up tomorrow, just take the 0 date as an L or a small win, and then just hold the fucking swing, and you'll make it all back and more with the swing. If you can't figure out how to be successful with a 50% win rate, when the wins are above 100% and you're adding to the wins, it's like, dude, don't fucking trade. All right? Without a doubt, this should fucking print. And even if you bought calls tomorrow and it didn't print, it shouldn't be 100% L. It shouldn't be that fucking big. It should be like maybe 50%. So that's where we're at, man. And based off the volume and based off the pattern, it's saying that tomorrow we can blow the fuck up if we literally just hold above 14 fucking 50, right? So that's my number one idea for tomorrow. My number one idea on stocks is fucking KSS. If it doesn't hit tomorrow, it's completely fine, because that swing will continue to fucking hit within time. I'm basically telling you, the stock's gonna fucking blow up. If it doesn't blow up tomorrow, it's gonna fucking blow up. So if you don't want any fucking loss, just take the fucking swing. And if it hits tomorrow, you'll make less percentage gains, but you'll still fucking win, right? So for those of you who don't know what the fuck you're doing, if you can't be successful with a 50 fucking percent win rate, or if you just want to win, just take the swing idea. For those of you more professional, use the information for what I said. Just plug in everything I fucking said into ChatGPT, and it's gonna give you a million fucking options on what you can do with that, on whatever the fuck you want to do with that, right? You know your portfolio, you know your risk management, what makes sense for you. But in terms of what I'm looking at, the most logical thing is to do both. Because if it happens tomorrow, it's going to be massive fucking gains, man. And even if it doesn't happen tomorrow, the swing trade will still work and print anyways. So in terms of where I'm at both. If I think it's blowing up tomorrow, I'm getting it basically the day I think it blows up, right? If the confirmation is there tomorrow, I'm getting it on 0 dates. But I'm also getting in on long-term expiration. Because the point is, one of them's going to fucking print like crazy, if not fucking both, man. And I'm not missing out on that long-term idea of free fucking easy fucking money as well, you know? So if that 0 date doesn't hit, if I was wrong about, it didn't blow up this day, well, the long-term expiration will still work. And then the next day, whenever it happens, I think it's going to blow up again, then I'll try the 0 date again, right? And then when that 0 date play does fucking hit, when it does blow up and I'm in it, it's going to be 200% plus. So it doesn't matter on the losses, man. Understand how we trade fucking options. Use my information to your fucking advantage. You're going to print non-fucking stop, right? You can also just buy and hold some shares if you want to do that as well, but it's really not needed if you're doing the further out, 30, 60-day expirations. Focus on the vast majority of those size, and if you do want to take shares, you could do maybe like 30% on shares. So next stock is Open. Open is a bit more difficult for me. Now, based off the chart, it is saying that its future is not over with. It is saying that we are due for another pump, at least to fucking, it looks like 360 is coming up. Something I'm keeping an eye on, man. I am keeping an eye on it. I don't think it's done quite yet. As you can see right here, we got the higher floors. So you had the green, red, green, bullish, green, red, green, higher previous resistance, break and retest, higher floors, green, red, green, fucking bullish, right? So I'm keeping my eyes on Open. Whenever it's been forming this, green, red, green, green, red, green. Okay, let's just, man, it's like, dude, people don't use this shit. This blows my fucking, it's like the most simplest fucking patterns in the market where you could just get fucking rich with the simplicity and just trade alongside all the fucking multimillionaires with this. It's like, dude, how the fuck are people not fucking using this stuff on breaks and retest, green, red, green, breaks and retest, green, double slanted, red, green? It's like, my fucking gosh. Every fucking time it's been working on fucking Open. All you have to do is find these patterns on stocks where it works with non-fucking stop and just buy the fucking calls and just go fucking long. So I don't even have to fucking say anything. You could fucking see why Open looks like it's due for more fucking upside fucking potential along with this wick that's waiting to fucking test. My gosh, this reminds me, man, this just blows my mind. Out of all the fucking bears in the fucking stock market, man, and I was the only fucking one. Name another person who put you onto this, man. Look at this, man. Every single week for years. This is a 3-year fucking chart. You understand? 3 fucking years. For the past 3 years, I didn't even go further back. I wonder how long this has been working for. It's never fucking failed. Every single fucking week. Green, red, green. Next week is bullish. Green, red, green. Next week is bullish. Green, red, green. Next week is bullish. Every single fucking week. It's been happening. The next week is fucking bullish, man. How the fuck could anyone be fucking red? If you are fucking red this week, trading is just not for you. I would strongly recommend you just get the fuck out of the market. Fuck. Do something else with your fucking money. Invest into your fucking self. If you don't know what to fucking do with it, or if you have money to just put aside, put it in a fucking high yield fucking savings account. At least make fucking 4.30%. Like fucking do something else, man. Every single fucking time the SPY's been going green, red, green. It's like, dude, if someone wanted to get rich in the market, why wouldn't they just wait for a green, red, green, or a fucking green double slanted red right here on SPY on a break and retest strategy and just make money the next week non-fucking stop? If you're looking for a passive income money printing fucking machine in a bullish fucking market that's pushing for new all-time fucking highs, why don't you just use the green, red, green or the green double red slanted green? And then you can also use it on the day trade side. Because last time I fucking checked, throughout the past 3 years, it's been working every single fucking week. But yet 98% of traders lose fucking money. Oh yeah, because trading is so simple. Oh yeah, because risk management is so simple. I'll tell you what. The number one reason on why traders lose money, especially the experienced ones, especially the ones who know somewhat what they're doing with trading in the patterns, is big position sizes. One of the most horrible thing you can do in the stock market is to actually take big position sizes. If you take big position sizes, you're going to blow up your fucking account. If you take big position sizes, you're not going to be able to hold your trades and let your losers turn into winners because you traded the fucking trend, but you went too big, so you got stopped out. I'm telling you, I genuinely believe the worst thing you could do in the stock market, it's not even over trading. It's big position sizes. Big position sizes are the biggest enemy within the market. You can make mistakes in the market. You can make the same mistakes in the market. You can overtrade in the market. You can fuck up in the market. But if you take big position sizes, what it does is it wipes out all of your fucking gains. It wipes out so much experience you had. It wipes up so much fucking growth. You could have had growth for fucking months, for fucking years of consistency, and then one trade wipes it all fucking out. I'm fucking telling you, man. The worst thing you can do in this market is big position sizes. It doesn't give you time to grow. It doesn't give you fucking progress. It destroys confidence. You know, you can be very successful and a very consistent trader, but one of the illusions within the market is you can genuinely be a badass trader, but then they run into a big loss and they let that loss think that they're shit, or they like pull back within the market. You know, I've seen it happen to traders all the fucking time. They don't think they're as good, or they pull back and they trade less, or they just take a break. Like I'm fucking telling you, man, big position sizes destroys traders, and it destroys some of the fucking best, man. Look at this green, red, green. Are you fucking seeing all the information I'm saying on fucking SPY working every single fucking time? Like, are you guys fucking awake? Look, it worked every fucking time. I just went back throughout the past 3 years in a couple fucking minutes, and I genuinely just showed you how it worked every fucking time. Every fucking time. Green, double slanted, red, green, or green, red, green worked on a break and retest. It's like, dude, we're in a fucking bullish market. Like, you guys need to wake the fuck up, look at the macro weekly charts, look at the daily. You can use these patterns on the daily chart. You can use these patterns on a 30-minute chart. Do you understand? Weekly chart, swing trade. Daily chart, swing trade. Daily chart sets you up for the next day if it's going to be a bullish or bearish trend day trade. 30-minute candlesticks, day trade. Same fucking patterns. Green, red, green, green, double red, slanted, green, green, red, bearish, and then the other ones I said before, bullish. It's like, guys, wake the fuck up. Get fucking rich. Gain some experience in the market. Start using the curriculum. Stop taking big position sizes. Focus on consistency. Focus on smaller wins the right way. So in terms of smaller wins, I don't mean small percentage gains. I mean you need to be making some big percentage gains with smaller position sizes. You know, just avoid taking big positions, man. I'm telling you, the most unhealthy thing you can do in the stock market is big positions. The most healthy thing you can do in the stock market is to figure out how to make big gains with low risk. So to make big gains with low risk, I'm telling you, you need to buy something that's cheap, that's low risk, with big upside potential, big percentage gains, right? Zero dates, swing trades with massive upside potential, decent timing with the trend. These are all things you need to do, right? And with that situation, you need to also add to winners. Add to winners and set profit stop. If you add to a winner and set a profit stop, it's impossible to go green to red, and it's going to double to triple your gains. That's what you need to fucking do. Never add to losers, and never take a big position size. If you're taking a somewhat big position size, right? Don't ever take a big position size. But if you take a bigger size, add to a win, set a profit stop. Never take a big position size, but if you take a bigger position size than you normally would, by adding to the winners, set a profit stop. Number one rule in the stock market, never take a big position size. Focus on trading the trend. Put yourself in situations that make fucking sense. Print money non-fucking stop. It's like, man, if you fucking listen, man, I'm fucking telling you. Now look, Tesla's another fucking one, man. Very fucking easy. Very fucking easy. So for this one, this is going to be very fucking simple. If we start to break above 339, breakout and retest, buy calls, strong bullish closing trend day. It's so fucking simple, man. So on this one, based off the daily chart pattern, it needs to break above previous day highs. It needs to start to break above previous day highs. So overall, to be bullish, and what I'm looking at here is, you know, this looks kind of similar. You have this red facing down, red facing down. See, look, this pattern right here. This looks very similar. Look at this one. My gosh, man, tomorrow's going to be the best fucking day to trade the week, man. You guys better be fucking in here, because I'm telling you, we're going to fucking go off tomorrow, man. We take weekends very fucking personal, and Fridays are our best fucking days. It's like, dude, they're about to shut down the market for 2 fucking days. Fuck that. We're about to fucking make 10 fucking days worth of profits. Look at this, man. Fucking red up. Oh my gosh, man. Fucking Tesla, man. Look at this fucking pattern here, man. Man, out of my favorite patterns that I'm seeing, in SPY, Coles, and fucking Tesla for tomorrow. Those are the best ones. Open is just a fucked up YOLO. You know, that's just one of those plays where nothing else is there and you just take it. Look at this one. Red up. Fucking red up. Red down. Fucking red down. Fucking trend reversal. Fucking trend reversal. My gosh. This is all you gotta fucking do. We are right here. I want it to gap up. I want it to break above previous day highs. If it fucking happens, I'm in. We're all buying calls on fucking Tesla, man. Get in early. Get the fuck in early. My gosh. For those of you who stayed till the end of this fucking video, you are going to print so much fucking money. This setup is a fucking gem. This is a hidden fucking gem. This is a needle in a fucking haystack. This is fucking genius. This is fucking genius. We need a gap up, and we need to break above previous day highs. If that's fucking happening, we're all buying calls. So right now, we're already gapping up, right? So on a gap up, this is what we need to do. If we start breaking and retesting above 337, very good sign for calls. Best confirmation, start breaking above 340. So these are my two levels for Tesla calls. Ideally, it needs to gap up. Easiest way to play it is a break above previous day highs. But if you're looking for a lower level, keep your eyes on 338 to 337 mid. As long as we're holding above 335, it's considered bullish. But the way I want you to look at this is, look, it's not considered bullish in terms of buying calls on Tesla until we really start to break above the previous day high, which is 340. So if we're starting to break and if we break above 340, retest, buy fucking calls, if we start to break above 338, look to buy fucking calls, look, man, just get in on this fucking play. That's what you need to understand about fucking Tesla. Now, in terms of the other way around with fucking Tesla, very simple. Very, very simple. In terms of the other way around, if we start to go below previous day lows, it's bearish. So we're going to go with this level right here, the closing price of August 8th, 329.65. If we go below this, it's bearish, and it's going to be overall bearish trend day. What I would prefer to happen is a gap up. If we gap up, it's likely going to be a gap and go in terms of your entries. It's considered the easiest play and the easiest money once it breaks above previous day highs. And if you just buy and hold calls, it's going to fucking rocket. It's going to fucking rocket like fucking crazy, dude. Tesla is a number one setup heading into tomorrow along with Kohl's. Kohl's is just a no fucking brainer if you just took the swing, right? If you took the day trade, you could lose, but we'll just take another day trade at some point in time, and then we'll hit it that time and make 200% plus. So in terms of the day trade, that's more of a process. If you lose on that day trade tomorrow, we'll hit it the next time when it actually blows up big. But we're still in that swing trade, so the swing trade will offset it as that loss as well, and we'll still bank on the swing trade again, right? And you're still, some of you are still leaving runners on that as well. So fucking Tesla, man. Tesla and Kohl's are the number one setups. Tesla is even a fucking, oh my gosh, Tesla is so fucking phenomenal. Dude, these are fucking insane. My fucking gosh, I cannot fucking wait. I genuinely cannot wait. I'm looking at the market and I'm saying this is genuinely one of the best days I've seen in a very long time in terms of pattern recognition, predictability, in terms of, man, if someone watched this video and read, they should just quit for the rest of their fucking trading. They shouldn't even trade anymore. They need to get the fuck out of it. Just like, dude, I genuinely don't understand how anyone could be read heading into tomorrow. I just don't see it. I genuinely do not fucking stand. This is not only the most predictable and lucrative trading day heading into tomorrow. It's very, very surgical, and I would say opportunity. Oh my gosh, there is so much fuck you money to be fucking made. There's so much fucking money to be made, man. Fucking Tesla, Kohl's, SPY. My fucking gosh, man. Look, if we're gapping up, gap and go. Break above 337, bullish. Hold above 337, bullish. Get it on calls. Break above previous day highs, fucking parabolic. For it to go parabolic and for it to be a strong breakout, all it has to do is break above 340. It's gonna fucking fly like crazy. So again, for this bullish closing trend day to be a real thing in my eyes and to feel safe and secured in calls, it needs to break above 340. So if it breaks above 340, get the fucking on calls, scale in, average your cost down. If it drops a fuck ton, buy a second strike. Both should fucking print, man. All right? If it doesn't do that, it's still considered bearish. So what I'm looking for is I'm looking for a break above 337 and a retest and higher support. Looking for a break above 338, a retest and a higher support. And then again, I'm not 100% fully convinced until we break above 340. If it's holding 338, I'm fairly convinced. Look, if a bullish channel right here is forming, I'm fairly convinced to be buying, and I'll be looking into it because it's lower levels. But in terms of the idea where buy at the higher levels and it's a no-brainer, it should just work flawlessly, and I don't see how anyone can lose. There's a possibility you can lose buying in here and it flips bearish, but I genuinely don't see a possibility of it flipping bearish if it breaks above 340. If it goes above 340, just buy and hold fucking calls and thank me later. With that being said, man, my gosh, this is why I love Fridays, man. Peak fucking volatility, fucking very personal trading day. We like to trade every day, very personal. The closing the market Saturday and Sunday, so we're going to be all fucking in tomorrow, fucking focused. And the zero dates on fucking stocks. My gosh, fucking Kohl's, fucking Tesla. Listen, man. You guys need to use this video and make as much money in the safest, cheapest, lowest risk way with your portfolio heading to tomorrow. That is what you need to do. Use everything I've given you and make as much fucking money being self-sufficient heading into tomorrow. Do that. And then join Team Roar. join Team Roar. It's the first link down below in the description. You will be gaining access to a real-time, zero-date options train alert system, cheap, low risk, far out of the money, zero-date options trades on SPY and SPX, SPY from 9:30 a.m. up until 3:30 p.m., and then SPX from 3:30 p.m. to 4 p.m. SPX YOLOs nearly every single day. Cheapest, lowest risk trades, biggest percentage gains. And then on Fridays, we also do 0 days on stock, where we're currently looking at Tesla and Kohl's. So I would encourage you to join our group. Surround yourself with secure private organizations. Surround yourself with multimillionaires. Surround yourself with the best real-time zero-day option train alert system on the game. Just throughout the past 2 weeks, we are up net positive over 4,000 fucking percent on all of our trades combined. Every single week, it's dozens of trades, ranges from 20 to 40 plus fucking trades a week, sometimes 50. And you're going to see we have the highest win rate in the game, and we have the best system. It's the cheapest, lowest risk. We don't use stop losses. We put in our entire max risk into these trades, right? So if the trade expires worthless and goes to zero, the most we lose is what we put in, our max risk per trade, right? Same way how traders use a stop loss, and when they get stopped out, they lose their max risk per trade, their R multiple, right? So everything we're putting in is our R multiple. And the way we double to triple the gains is by adding to winners. So we do end up adding to winners, which means we're putting in an extra 1 to 2 more R multiples, meaning in total we have 2 to 3 R multiples at stake, right, to double to triple the gains. But we're not risking that because we're setting profit stops. If you add to a winner and set a profit stop, it's impossible to go green to red. And then we move our profit stops up higher to ensure that if the market has a big move against our trade, we get profit stopped out where we moved it to, not where we originally set it to, right? So as it's working against us in a particular situation, we get profit stopped out where we moved it to, not where we set it to, so we keep the bulk of our gains, right? And we add to winners to double to triple the gains. You will see whenever we have a 100% loss, it doesn't matter because the percentage gains always outweigh the percentage losses, and we have a very high win rate, not that we need it, right? It's the strongest foundation to actually be successful with a low win rate by making bigger percentage gains and by adding to winners to double to triple the gains, right? And we do not add to losers. So you're going to fucking love it. And you're going to see we hold our trades for long periods of times for the biggest percentage gains in the market. You're going to see we trade the complete opposite of how everyone else trades. And you're going to see we're the absolute best at doing this. And you are going to fucking love it, man. I'm telling you, you join our secure private organization. We are at all-time highs right now, along with the game plans, along with our members' results. We have a member who joined a couple weeks ago. He's up over $70,000 with us, trading on a Webull account. It's fucking amazing, man. I'm telling you, you guys are going to print at speed of light. Oh, and this was another setup. I'm keeping an eye on INTC. Keeping my eyes on this heading into tomorrow. Fucking UNH. Keeping my eyes on this heading tomorrow. INTC is interesting. I could genuinely see myself making a trade on this as well. I'm going to keep my eyes on this one, man. It's a very interesting setup here, a very rare setup. UNH, I'll keep my eyes on it as well. But, man, if you look at these setups and these patterns, man, I think you guys should have that awareness that, man, this I got in these patterns and everything, I'm putting you guys onto the best. This is the absolute best, simplest way to make money with the most explosive potential and the cheapest, lowest risk, man. That's the beauty of trading the trend. You could just hold the trades. The beauty of taking small position sizes is you can hold your trades forever, and you decide what expiration you want to choose. Obviously you get out before expiration, so you can hold up until that. And you're going to see, man, it's just fucking amazing. Man, this UNH setup looks fucking amazing too. I'm not going to go on all over this, but look, man, you guys need to join our group. You need to experience this in real time. You need to see for yourself. We do this every single day. You need to see our game plans, our curriculum, our work happening on the floor, on the trading floor in real fucking time, man. Printing money non-fucking stop. Getting you on the best strikes. Getting you on the best entries. Adding to the winners. Teaching you how to trade these overall patterns by trading alongside us, man. It's going to start to rub off on you, and you start to fuse, you start to click with us. You'll fucking see, man, it fucking works. You're going to love it. You're going to love the setups. I mean, look at the rarity. Look at the rarity. And think about this, man. I put you on to the most rare setups, and I also put you on to the most easy, best setups. You can create like a sheet, create like a checklist, and check all the boxes. And in terms of what's in these boxes that I'm checking off, is this a rare setup? Does this have unlimited upside potential? Is this a play where I just genuinely don't see how you can lose money if you hold it? If you just held the play, even if it dropped 90%, I think it has enough time to come back to life before expiration, right? That's what we're doing, man. Even 7 out of 10 times where we enter a dead play that drops 50%, it comes back to life and it goes green before it expires. And we set profit stops to ensure that we don't go green to red. Losing's a personal choice, man. We are entering the cheapest, lowest risk, rare trades with the biggest upside potential. That's why we don't lose. And the key to this is small position size. In order to thrive in the market, you have to be able to survive. One thing that I find sad about trading for a lot of people is I genuinely believe that there's a lot of traders who might end up making it. They might not be making it where they're at, but I genuinely believe they could make it. And I think the tweaks that they need to make is, first of all, smaller position sizes. If I told you, if you want to take bigger position sizes, you got to add to winners and set profit stops. That's the only logical way to take a bigger position size. And again, that's not a big position size. That's a bigger position size. Never take a big position size within the stock market. You always have time in the market. You always have another setup in the market. You always have big upside, rare potential setups within the market. You always have the curriculum and education. Don't go throwing all of that away for a bigger setup, for a bigger fucking hit, for a bigger fucking dopamine spike to hit your fucking goal. One of the worst things you can have in this market is actually a goal. Don't have any fucking goals to make money or to grow your fucking account. That's going to throw you off and sidetrack you from trading the best setups at its prices into trading the best of your fucking abilities. You'll be making poor trading decisions. Make trading about trading, not about the goal that you want for your fucking trading. Make trading about fucking trading. And then when you do that and when the market's closed, then do whatever the fuck you want with that freedom and what you want to fucking create. I'm fucking telling you, man, one of the most saddest things that I see within the market is people who take big position sizes, they never give themselves a chance to get any progress, to get any fucking results. They put themselves in a fucking illusion where they just give it all back in the end fucking anyways. So why even start? So you can gain, learn, grow, and gain experience for what? For fucking what? You're not growing. You're growing like in terms of experience, you're gaining experience, but you're not fucking growing anything. It's like you're just up, down, up, down, up, down, up, down, all in fucking baby zero fucking. I got fucking telling you, dude. That's what I see a lot of fucking traders doing. And man, to do that in our group, you have to be a fucking asshole to do that shit in our group because we're having weeks where we're making over 3,000 to 4,000% on all of our trades combined. So who in their right mind would want to take a big position size on those type of gains? You'd have to be a complete fucking degenerate. All you'd have to do is just compound your account every single month and cash out at the end of the fucking month. If not, just do it every single fucking week and just keep resetting the fucking account. Compounding is a double-edged sword. If you do it too long, you're at risk to taking a massive fucking loss. That's what they don't tell you. That's why you should be resetting your account after massive gains, not compounding until fucking infinity. But with that being said, man, that and just also, I genuinely think two main things are traders who take big position sizes. Those are the absolute worst in my eyes because you never have a chance to begin with. Why do something if you never have a chance to succeed to begin with? Now, if they're fucking going all in and full porting, by all means, they can gain a fuck ton of experience in the market and learn. But the point being is they're never putting themselves in a situation to actually be successful and grow in terms of stability and long-term growth. They can learn a lot on the way and they know what setups works, but they never grow or they never make it because they always give back all the fucking gains with big losses. They can literally make gains consistently for a fucking week, 2 weeks, give it all back, or for months, give it all back, or for a year straight, then give it all back like that, right? It's the worst thing you can do. The worst thing you can do is having all your profits on one trade and then giving all your profits fucking back on the next fucking trade. Think about it like this, man. Just fucking, I don't know. I'm trying to think of fucking scenario. Just fucking, literally fucking just stack your trades. Stack your money, stack your trades in a reasonable way. And the big gains on those trades should be coming from the percentages, right? Big percentages gains. And I'm adding to the winners and setting profit stops. That's where the big gains should be coming from. Now, in terms of, your trading, it should be stacked with small, consistent gains. And the bigger gains in that small consistency is the big percentage gains in adding to the winners and setting the profit stops, right? But stack your trades, man. You had a nice win. All right, then a couple losses, you're back at break even. You had some smaller wins, you're stacking. Okay, you're still just stack your trades. Never put yourself in a situation where you just had 10 winning trades in a row and then the next trade you give all 10 back. Don't do that. Stack it. Keep it somewhat stable, but thriving. Think thriving stability, thriving fucking stability. Stacking your trades. You're building this slow ladder. And then with compound interest, not just with that, just you don't even need, you can compound for short periods of time, compound for a week, compound for a month, reset your account, right? So think compound, short period of time, and time in the market, consistency in the market, consistently being successful within the market, along with compounding accounts you keep resetting within the market, gradual growth, smaller position sizes, never big position sizes, but at times bigger position sizes adding to and setting profit stops. Keep doing that. Make trading something to enjoy. I'm telling you, make it something to enjoy. Be more consistent, be more stability, make your big wins come from adding to winners and big percentage gains. Make trading enjoying. Don't make it a horrible thing. Don't make it something, man, I just had 20 green days in a row and now I just had 2 red days in a row and I gave back all 20. Don't make it that. Make it, okay, I just had a green day here, then I just had a red day, but I'm still up. Make it that. Make it that I'm still up. I only gave back, 30% of gains at most, right? Make it enjoyable. Make it something where you can genuinely see yourself not just surviving in, but thriving in. And as you're surviving in that, you're going to be able to stay in the game and it's going to make sense. It's going to make a hell of a lot more sense than someone who just does very, very well and gives back all their gains in one single day, or someone who gets rich fucking quick and then loses it all very quick. Like I'm telling you, man, make trading an enjoyable thing. And I'm telling you, the easiest way to get started with that is to never do big position sizes. So just start with that. Starting today, for those of you who are taking big position sizes, never do it again, and then take it from there. Think about it. If you were taking massive size, making big gains, you need to now make that shift to, okay, I want consistency. I want stability. I want I want my big wins to come from my results in trading, which means I need to find setups that are cheap, low risk with big upside potential. And I need to try my best to keep my win rate up there. I need to ensure that I never go green to red. I set profit stops. I need to ensure that I never go green to red. I need to ensure, that I add to winners to double the gains. I need to ensure that I hold trades for longer periods of time to make the bigger percentage gains. Have your gains come from trading decisions, not from big position sizes, from purely logical trading decisions, along with the heart of cards, your intuition, when it's speaking to you, you're in the eye, having the eye for the market, man. I'm telling you, man, make trading a beautiful thing. You should genuinely make trading something where it's like, you don't see how you can lose. And when you are losing, you're like in shock. It's like you're learning so much from how you're losing. Like you're blown away in terms of the education you're losing. Think about it like this. If you take a big position size and you lose a fuck ton of money, you basically learn nothing. You really didn't learn much. You didn't learn jack shit. You might have learned 1 or 2 things, right? But if you're taking, small wins but if you're taking small size, right? You're taking small size and your wins are always bigger than your losses, and they should be because you're adding to winners and you're making bigger percentage gains. You're going to learn so much, as you have some losses along the way or as you have some red days. You're going to learn so fucking much, and it's going to be something actually that makes sense and something actually you're trying to, because I'm telling you, one of the biggest mistakes I see with people in the market is they don't even give themselves a shot. They just use it as a casino, as a tool to gamble, as something that will never sustain, as something that will never be stable, as something where basically they're getting no educational experience. At the end of the day, you can be the most educated, experienced trader, because you've had time and experience within the market. But the easiest way to throw all of that away, I promise you, is big position sizes. That's the easiest way. The easiest way. I'm telling you. And that's literally the key to it. It's big position sizes, If you take a big position size and you use a stop loss, you're probably thinking, oh, it's a small loss. I get stopped out. I control where I set my stop loss. That's a problem. And the reason why that's a problem is you can't hold your trades. And the biggest advantage to trading the trend is to be able to hold your trades. The biggest disadvantage to a stop loss is it stops you out, where if you traded the trend and you got stopped out, eventually it's going to come back to life and go green, right? And the root to this, I'm telling you, the root to this is trading the wrong asset classes in big position sizes. Traders wouldn't need stop losses if they didn't take big position sizes. And a lot of traders take big position sizes because they trade asset classes that give them small returns. And they use stop losses to make it an ethical way to do it. But I'm telling you, man, the devil in the stock market is big position sizes. I genuinely believe out of everything in the stock market, the worst thing you can do is a big position size. It's literally the worst thing. It's the worst fucking thing you can do. And I told you, if you want to take a bigger position size, not a big position size. Add to winners and set profits. So for those of you who use this video and information, you are going to have a green day, very, very big, and a phenomenal fucking weekend. You guys enjoy that. Be self-sufficient. Use it to your advantage. Understand the rareness of this video. Understand the game plans and what's at stake heading into tomorrow. You need to be laser focused. You need to be self-sufficient. You need to be fucking sharp, and you need to print. Inside of Team Roar, we're going to be trading all this in real fucking time. I'm looking at this chart right now. I'm looking at all the trades. I'm feeling every fucking thing. Man, everything I'm seeing, everything I'm fucking feeling. I'm looking at this situation. Man, it's like I'm looking at this chart right now, and I'm just looking at I'm genuinely seeing like a visual in my fucking brain. It's like, we are going to make so much fucking money in the most wild, fun, fucking enjoyful way heading into tomorrow. It's going to be fucking amazing, fucking dominating, fucking playful. It's going to be fucking beautiful. It's just going to be so fucking amazing, man. The setups, the opportunities, Fridays, 0 day. Oh my gosh. Open up the fucking market. I am fucking ready. We are so fucking ready. Look, this is the most beautiful day I've seen in a while. Join the group. This is a day in history you will not want to miss. I can assure you. Tomorrow we will continue to make history. Do not miss it. It's the first link down below in the description.